Hello and welcome to Leviathan News. It is April 15th and it's not April 1st. We don't have anything to joke about today because the markets got wrecked over the weekend. Just an absolute bloodbath coming into.
I can hear it in your voice, Sam. I can hear it in your voice.
I'm totally fine. I'm feeling good actually.
Great.
I'm up so much from the lows of last year that it doesn't really even matter anymore.
Thank
But
God.
I know. But it is kind of crazy seeing, paper wealth being evaporated in just
Amazing.
a few minutes, right?
The quickness that it can happen is always quite remarkable, huh?
Yeah. So because of the whole Israel-Iran kerfuffle that happened, there was a war, then there was no war. Prices just went off a cliff. We saw a 10% decline in Bitcoin starting in a pretty rapid spot. Everybody thought we were going up to 70,000 or a little bit higher, but didn't work out like that. On the 13th of April, which was Friday, on Saturday, prices declined from 67,000 all the way down to 62,000 in just a couple of minutes. There was about $288 million worth of liquidations, which honestly wasn't that much. For the size of the move, we had less than $1 billion worth of liquidations. So I think that when we look at this, the market dynamics, people obviously are long coming into this. Maybe they had taken some risk off coming into tax day, which is actually today for America. Maybe people were doing some selling over the weekend, but the move itself has almost been fully retraced. So we dropped down to 62,000, went back up to 66, and we're kind of sitting at like 65 right now. And I thought there was a really nice quote from Millie showing that the market makers themselves are showing pretty tight markets. So this sell-off might just be some like passing volatility. And
How low did it go, by the way, Sam? What was like the lowest that you said, though?
I think it was 62,000 that we dropped to.
It's not that low, man,
Yeah, but I mean, it's a 10% decline from last week, right?
Yeah, for sure. I mean, yeah, for sure. It's not like I'm not saying it's it's nothing, but relatively, like it could have gotten like so much lower.
Well, the sell-off really wasn't in Bitcoin, right? The sell-off was more in the alt markets, where we saw some of the big DeFi coins that we cover on this show really take a hit. One of the bigger ones was CRV, Curve, which had a little bit of a moment over the weekend.
Everyone's favorite.
Yeah, everyone's favorite. So CRV was coming into last week, trading at about 60 cents. And over the weekend, starting last week on the 12th, and then coming in over the weekend, so starting on Friday and going into Saturday, it declined all the way down to 38 cents. And so there was a lot of questions about, like, can Michael remain solvent? Like, is he actually going to get liquidated this time?
But it's always the question, when I don't know, he's been solvent so far.
Yeah.
I've no idea what's going to happen, but I definitely not financial advice again, but I personally
I like financial
see,
advice.
I see Michael as we all do. I see Michael as one of the most capable people within the space. So for me, I don't know.
Yeah. And like I was in the Frax trading chat for a lot of the weekend, and Frax has retraced all of its move from last year. There's quite a lot of liquidations, quite a lot of sell-offs. So I think it was the alt market that was really affected by this in just droves, right? The meme coin sold off a ton. I believe they came down on average about 20%. And yeah, it's just been a tough weekend, I guess. I didn't even look at much. I mean, I was following it, but I guess like at this point in the bull market, you just kind of like understand that there's going to be 20 to 30% pullbacks before we rage even higher.
Way too many paper gains on leverage, sir. Especially for like the altcoins, the meme coins. I was looking at that guy that got liquidated on all of his money because he was all in on Pepe, like a 3x long on Pepe,
Ah,
and
yeah.
the guy made like 1 million and then lost it all. And he's like, yeah, like 3x all in on Pepe. He had 1 million long position, lost everything, and he was like, I'm contemplating suicide. And then it turned out that
No way.
Binance only liquidated like 85% of his position, so he got like 150K back. So I think that this was a moment where he was like, okay, I shall live, But
It's insane.
to
Like what these markets can do to people. Like we often talk about all the rational aspects of trading, but the irrational and emotional aspects of trading are sometimes like even more effectful.
Yeah, I think the issue that most people get themselves into is that they take a little bit of leverage, and then that turns into a lot of leverage, and it turns into a big portion of their portfolio. Like if more than 10% of your portfolio is leverage long at a high rate, like 3 to 5, 10, 40x, like you're going to have issues at some point. There's just the market wiggles too much, and it doesn't really matter how like good of a trader you are. If on a long enough time scale, you're going to get liquidated.
Yeah, especially like if you don't like follow it like consistently enough, like because like you said, you can have 10% of your portfolio on a leverage position, but then the market moves up a bit and it's 20 or 30% of your portfolio. So how do you respond? You know what I mean? Do you respond? Do you keep taking the risk?
Yeah.
And often it's very easy to like keep it going, and all of a sudden it's like 90% of your portfolio. At some point,
I think it's just bad risk, right? Like if you have less than $10,000, maybe a little bit of leverage is good, right? Because you're
it's
trying
greed,
to,
man.
you're trying to get up, you're trying to hit that 6-figure mark, right?
Yeah, always. And by the way, when you get to that 6-figure mark, you probably are like, oh my god, this can go to like 7 figures, So
I've been there,
the greed is endless,
but once you hit like high 6 to 7 figures, you don't really have to take that much leverage anymore. I mean, you can sit spot and.
But you have to be mature to take that decision.
Yes.
It's not very easy. And by the way, if the way you've made your fortune, like if the way you've come to like high 6 figures is with a meme coin, it's not that easy to take the decision to all of a sudden, okay, I'm going to move into Ethan stables and going to farm my like 150K a year and I'm good. It's such like there's a much higher probability that whoever invested in a meme coin and became like insanely rich would keep thinking to himself, okay, if this just 2x's again, I'm like it's so much easier. That's how, like, personally I had, like, in the previous bull market, all my paper gains and then lost pretty much 90 to 95% of them because I was so greedy that kept saying to myself, oh my god, but what if it doubles again and again and again and again, and after a while, like, I was schooled about why they tell you to not be greedy.
Exactly. Yeah. Look, I will be happy when the day comes that I can move fully to stables in this cycle of the market.
But you're a very mature investor, you know what I mean? You're very knowledgeable about finance. No, of
No,
course.
no.
You have your Degen way.
I've round tripped way too many things, but I have some. I've hopefully learned my lesson this time. Not going to round trip again.
Yeah. I'm learning a lot from you, from the way you invest, actually, both from our conversations and both from like some of our talks, behind the scenes. Really, I think that I personally, for sure, have a lot to learn from you, Garrett, and the others.
So some of the most successful investors that I know have probably made like 5 trades in the previous 5 years. It's like you make like a generational trades. Yes, like for example, 2020 March, when the big crash happened, Ethereum was like $70. Generational trade.
Mm-hmm.
People took that, and then when Ethereum went to like $2,500, $3,000, they just completely exited the market. And from that point on, they're there is nothing to do anymore. Yes, there is no reason for me to stress out. There is no reason for me to try to do another 2x. Yes, and I also have that mentality. For example, the only difference is that I never completely exit the markets, because working in the industry, it's like you feel kind of stupid, like you're spending so much time and effort and brain power, and then you're like sitting in tables, and it's the most painful thing. Yes, like one thing which is more painful than losing because the markets have went down is like being sidelined. That is also, I've seen people that, for example, very bright people that did quite a lot and were building quite a lot, and they missed the previous bull market because they were waiting for like Bitcoin to be like $3,000, and those people just disappeared from the space. It is brutal, because you have been in the industry for multiple years, and then in order to do that one trade that you're so convinced, yes, and everybody back then were talking about it, yeah, Bitcoin is going down to like 3K or something like this, and then Bitcoin rallies and goes up to like 60K, and you are like, okay, I've spent 5 years, and when everything finally happened, I was out. So that's so brutal that it really is much worse than, okay, Bitcoin is going to drop down from 60 to 20K, and you're like, I don't care, because on a long enough time frame, I'm fully convinced that this asset is going to be worth 10 times, 20 times more.
Yeah. Well, I mean, speaking of yields, so I don't think we properly introduced. This is Dimitar from IPOR. And we asked IPOR to come on today to come talk about their recent Fusion deployment that they have. And taking a look at IPOR, it's one of those things where I would be happily in if I was fully in stables right now. I'm like, look, you can earn 60 to 70% yield on stables at the moment, sitting very happily. With even you don't need $1 million. Like even with 400K, that's $150,000 a year at these rates. So it's not. I think people just need to understand the risks and also what they're really looking for, right? Because I think everybody wants to go back to stables at some point, or fully back to Bitcoin or ETH, and just earn yield on it.
Yeah, I mean, DeFi is very rewarding in terms of providing yield when there is high demand. Yeah. So for example, for the past like 1-2 years, I think that the rates were like quite subdued. We were looking at rates of like 4 to 5%, and there was the entire thing was like so much money leaving DeFi, because interest rates outside in TradFi on the bonds are like 5%. So a lot of money left. But then we actually went on a bull market, and you see like now for the past year already, like the yield is above 10%.
Yeah.
I would say average like 12, 13% yields. And this is like
even higher
over collateralized.
Even higher with what Athena's been providing, right? Like those first couple of weeks have been in the 50s to 60s. Now down to 10%, but still.
We're going to speak about Athena, I guess, a little bit later, because indeed they did make a change, I would say. But actually, the bigger change to the rate regime happened even way before Athena. Yes, this is something that is just very recent, that happened like 1 month ago. But we were already in the 10% rate regime 3, 4, 5, 6, 8 months ago. So DeFi is very generous. And now when we have also things like, like what Athena is doing and generating those 50% yield, I mean, for now it's not that scalable, I would say, because I think they're like 2 or 3 billion. They're still not that big. I am not very sure whether they can support that whole thing with a 10 billion worth of assets, how that is going to affect, the funding rates on the perps, and how much bigger the risk becomes, because let's say you can unwind 2 or 3 billion. It's not that easy, but you can. But what happens if you need to unwind like a much bigger position? Really like the product though. But yeah, going back to yields, you need to understand that there are specific occasions where DeFi can be super rewarding. Everybody are searching for that money. Everybody are searching for that leverage, and we have the perfect markets to take advantage of that. So maybe, maybe you are not the type of person who is like, okay, I'm going to risk my money on a smart contract risk for 3%. Probably you shouldn't do it. But when markets like Aave, like Compound are basically giving you like 15%, and those are over collateralized markets that have been there for multiple years and have probably tens of millions of dollars worth of audits, and the entire Ethereum ecosystem, all of the developers are constantly looking on top of them, and this is paying you like 15%. It's hard to miss.
So Dimitar, we had Darren on back in December of last year to come talk about IPOR. You guys have been building and taking in capital, and now you guys have the upcoming Fusion that is about to be deployed. What exactly is that?
To explain Fusion, I guess I need to give like a brief history, of IPOR, and I'm not sure how familiar you are, but what we do is we do interest rate swaps. So we take rates from the credit markets, from the existing credit markets, we construct an index, and we build interest rate swaps for stable coins and also for Ethereum. So this really is a very strong utility that basically allows for fixed rate markets in DeFi, and it's also a very scalable instrument, where you can just use a very small amount of money to protect yourself for a very big amount of notional. So let's say you're a borrower on Aave, you have $10 million debt, you want to protect yourself from the yields, from the rates going up. Yes, let's say that you're like, okay, right now I'm paying 10%. I want to make sure that I'm not going to be paying 20%. And then what you do is like you do an interest rate swap. You basically go to IPOR and you're like, I want to pay the fixed rate and receive the floating rate. So this basically creates a hedge on that rate movement. So you're sure that your cost of borrow is not going to increase above 10%. So this is the instrument that we created specifically to massively increase the utility that DeFi credit markets have, because one of the biggest issues that we have in the space right now, I would say, is that we don't have fixed rate markets. We have a lot of money. We have billions of dollars deployed in variable rate markets where the rates can go from like 6 to 40% overnight, and this creates problems in terms of like attracting not only traditional investors, but just attracting any form of investment into DeFi, which is like capital deployment. Yes, I want to be borrowing money and using it for something else. I want to be lending money and receive like a stable form of income. This simply does not happen in DeFi. Yes, it's very restricted to like, I want to borrow money for leverage and speculate on something brutally, and whatever happens. Yes, I'm willing to pay 50%. That's okay. If you are doing some meme coin trade, or if Athena is paying you 80% and you are borrowing at 50, you are still kind of okay. But it basically means that 99% of the users, it makes the credit markets unusable for them. Because if you want to borrow money for, let's say you have Ethereum and you're like, I don't want to sell my Ethereum, but I need $100,000 to get myself something, and you want to borrow that money from the DeFi credit markets, which they were created for that function, to actually not need to spend your crypto, but just borrow against it, and then pay back your borrow at a later date without the need to lose the potential price appreciation of Ethereum or Bitcoin. But now all of those users are basically sidelined because they're priced out. So this is why we went on the, like, we were looking at the space, and this was a massive opportunity that we saw. Like, how can we make DeFi better? Well, introduce interest rate swaps and use already all the infrastructure that we have, the different credit markets that are very battle tested, Aave, Compound, back then, Euler, Notional. Use that and just make DeFi much more scalable. So we launched the protocol, and we actually saw a lot of usage, like a lot of volume. So to date, I think that we have underwritten something like $4.5 billion worth of volume on interest rate swaps. But the trick is that a very big percentage of that volume is basically made by whales, very big players, and usually around a specific trade. So let's say USDC depegging, USDT depegging, or they're going to be borrowing like $200-300 million. So the utility is absolutely there, but only for, I would say, a very small niche of power users that understand very well interest rate swaps, understand very well the development of the credit markets, and they basically take advantage of that. They're like, okay, I'm going to protect, I'm going to pay 200 basis points extra to protect myself from 1,000 basis point move, just to make sure that my trade is going to be successful. And so this again sidelines a lot of people that are not that sophisticated. But our vision is that in general, credit markets like DeFi should really be accessible to everybody, not only to the whales, not only to the power users. And this is basically where Fusion comes in. So outside of, just doing like a very simple asset management of like, I want to lend money and receive yield, or I want to borrow money, tell me from where to borrow them, Fusion actually puts like context into rates. So if you're thinking about like, what does the typical DeFi credit market user wants? Yes, he wants to earn the highest amount of yield. He wants to borrow at the cheaper prices. He wants to achieve the highest amount of leverage if he's borrowing, and he wants to be protected in case like liquidation is happening. Like he does not want to get liquidated. So this is what Fusion does. Yes, it creates a vote that has an automated business logic where let's say you say, okay, I have 500K, I just want to deploy my capital. Instead of you thinking, oh, should I go to Aave? Should I go to Compound? Should I go to Morpho or Euler or Fluid or Gearbox? This is being done by the business logic of the vote itself, where every block, all of that data is basically being gathered from all of the credit markets on chain. Then there is a lot of computation in terms of adding context to, like, you are not comparing, let's say, the 6% rate on Aave with the 10% rate on Compound. What you're comparing is like, if I deposit, let's say, $5 million right now into the credit markets, how should I deposit them in order to affect the rate the least, to ensure that I'm earning the highest rate, and to also make sure that I'm not just putting money in a market that the rate is going to revert within 2 hours and I will need to switch my position to another credit market. Yes, so it's not like a spot or a credit market aggregator. Yes, it's like all of the intelligence together with the execution. And this is basically what we are saying here is like, you as a user are not going to go to the front ends of other credit markets. Yes, you have one requirement or two requirements, and the vote is going to execute that for them using all of the liquidity which DeFi right now is providing.
Very cool. So when is this coming out?
So we just made the review last week. So this is going to come out like gradually. Yes, the first users that are going to be able to take advantage of IPOR Fusion are going to be the IPOR LPs. So liquidity providers that are already providing liquidity in the different IPOR pools, or the stablecoin pools, the Ethereum pools, the wrapped Ethereum pools. Those pools are going to be the first users of the Fusion protocol. And then when we do this, at a later stage, we are also going to create, the required interface for anybody to be able to launch their own vote. Create a vote, have other people invest in that vote, or just create it for yourself. So if you are like an asset manager and you are like, okay, I want to go into DeFi. How do you go into DeFi right now? Are you going to go to 10 different protocols and understand like how the smart contracts of those protocols work, the different LTVs, liquidation parameters, and so on, and rate behavior? So this is basically an infrastructure for credit.
Very cool. Well, we'll be looking forward to that. I know that like finding rates is always fun in DeFi, and it's glad to see you guys adding new products on top of IPOR.
Fun to those who understand it, maybe.
Yeah.
We have that issue. We have that issue a lot. That it's very complex to understand what we're building, to explain what we are building. We try to cover this with UX. Yeah. So if when you are showing those rates earlier on the IPOR website, yes, and if you click on a pool, and you actually have the option of choose your APR. So you're going to see like one logarithmic curve that looks like this, and you will be able to slide that curve, and you will choose whether you want 30% APR or 50% APR or 90% APR. And this is basically how the Power IPOR works, how the Power IPOR token works. It allows you to get like a multiplier on your yield depending on the proportion of stable assets that you hold in proportion to how much Power IPOR you have delegated to that pool. So it's a little bit like V-curve, yes. And it is quite complex to explain how this works. So, like you see, we try to have the solution in the UX itself. Just pick it, choose your number, how much you want to receive, and click the Zap button, and that's it. You're in the pool and you're earning. So for the Fusion pools, it's also going to be like a very similar experience where you don't need to understand like all of the computation which is happening in the background. You don't need to understand like how the keeper is working. Yes, from your perspective, you just want to know: am I going to be earning the best yield, or am I going to borrow the cheapest? That's what you care about, and that's what we are going to do.
Very cool. Well, thanks for coming on and letting us know more about Fusion. I know that we were talking about BTC at the beginning, but I did want to bring up a tweet. We actually have Equinox XBT from Fjord Foundry as well here today. He just popped in. How you doing, sir?
Hey guys, how's it going?
It's going well. So I actually wanted, before we hop into the Fjord stuff, I actually did want to bring up this GCR tweet. Kind of relevant at this point. He's probably right. We're not at the end of the cycle yet. And so GCR is out here saying, if you've been sidelined, this is a good opportunity to scale into whatever tokens you're thinking about. And if you're fully invested, just survive, hold your spot positions, and don't capitulate. Surviving is the hard thing, right? Someone once said liquidations are a forced transfer of wealth from traders who need leverage to wealthy spot buyers.
That's good.
Yeah.
That's very true.
Yeah. So
Did you see the amount of traction this tweet has gotten? Like him tweeting after so long, it's insane.
Yeah, 18,000 reposts, 52,000 likes, and 5,000 comments.
8.3 million views. It's really a lot in today's X, in my opinion.
Yeah.
On for every field, but for crypto, for sure, man, it's a lot.
Yeah, I again, like, we're probably mid-cycle right now, seeing how everybody's made a ton of money already. But I don't think we're...
In my opinion, it's not even close to mid-cycle, by the way. I think that we're so much into it that for us, it may feel like it's mid-cycle on some aspects. But I think that we haven't reached 5 or 10% of the cycle, in my opinion. But again, not financial advice, guys. I have no idea what I'm doing.
What about you, Equinox? Where do you think we are?
Yeah, no, I'm kind of in agreement with that opinion personally. I know things are getting pretty exciting, but it really feels like things haven't really taken off too much for me. I mean, like we're on this nice run up. The market's kind of pulling back and crabbing right now, it feels like, but I personally feel like we still got some room to go upwards in the cycle. I don't know, how soon it's gonna, how long it's gonna take for us to get there, but I also feel like we're kind of at the beginning of the cycle, not really in the middle. But yeah, that's just my take on it. Who knows, right?
Have you guys seen any, like, as this cycle has gone along? So let's just pause and take a moment to talk about Fjord. Or like, what exactly is Fjord Foundry that you guys are doing?
Yeah. So I guess a quick intro to what Fjord is I would say it's the best decentralized platform right now for teams to raise capital and launch their tokens. So formerly, people might have known us as Copper Launch, and since then we've been going pretty steadily for several years. So just last quarter, for instance, projects launching on Fjord collectively raised about 130 million. So if you put us up to the other leading, like, top 15 leaders in this vertical, we raised over 35 million more than all of them combined. So we're I don't know, if you're looking to raise capital for your project and launch your token, this is the place to do it, really.
Yeah. I've been following you guys since you've been Copper. Have you seen any shift in market participant dynamics on Fjord as the cycle has developed?
I mean, as the market's gone on, we've just kind of seen more and more activity. It's just kind of gotten more exciting on here, on the platform. But yeah, I mean, that's the best I can give as far as like analysis on that.
Yeah, well, it's fine. It's fine. I mean, I think Copper is, or sorry, I think Fjord's really interesting because, like, there's always questions about, like, how do you do a fair launch? Going back to the ICO days, it was essentially who can buy whatever fastest, or like send the quickest to an address. And then we kind of moved into this cycle where it was all VC driven. And now with Fjord, we're finally at a place where it's more about building liquidity, which at the end of the day is what I think people want. It's not so much about the deal structure. It's more about having the facility to make those swaps back and forth, and potentially take part in the upside if there is successful growth of whatever protocol there is.
Yeah, totally. I mean, with our LBPs, we use balancers weighted math. So giving different starting weights for the token and ending weights, and it throws a decay function on the price, which basically starts it off pretty high, and then gradually pushes it down. And what this creates is basically like an anti-sniper, anti-bot, anti-whale environment. So this is very much what helps create a fair token purchasing environment. And then typically the LBPs are spread out over about 3 days on average. So this gives time for market participants to get in, and for price discovery to be found. So I think that's one reason we see LBP so popular. It really just does that. It creates a fair market opportunity for people to get in, creates a fair supply distribution, and it also helps teams generate initial liquidity for their token. So
yeah,
does a lot of things, all in one.
So, like, what are the hot sectors right now? I mean, that you're seeing on Fjord?
Right now, I mean, we're seeing a lot of AI. We're seeing different like chains being launched. Like, I don't know, Omni-chain is pretty big. Yeah, gaming as well was pretty hot. a while back. That's kind of mellowed out, but that's kind of what we're seeing right now.
Yeah. Yeah. And you guys have expanded off ETH into other multiple chains, right?
Yeah. So, we're on ETH, we're on Arbitrum, Base, Optimism, Polygon, Avalanche, Blast, Mode, and over the next several months, we'll be expanding to several more EVM chains. So Bear Chain, Mantle, Lightlink, ZK Sync, Psi, Manta, Phantom, Monad, and then this month actually we'll be expanding onto Solana, so non-EVM.
Wow.
And so yeah, we have a pretty big effort to really hit the multi-chain narrative that we're seeing, and everyone's seeing huge activity on Solana right now, and we know there's a great potential for us to be there as well. So that's kind of our next big effort is expanding and deploying our tech over on Solana.
Quite a lot of capital there for you guys to try and get.
Yeah, a lot going on.
Honestly, one of the places with the most capital outside of mainnet.
Yeah, activity's hot on Solana right now. The network's super congested. Meme coins are crazy over there as well. So it's a good place to be.
I tried to buy a meme coin last week on Solana because like everybody was speaking so much about meme coins. And I was like, okay, today is the day. I'm going to buy a meme coin on Solana. It took me 45 minutes.
No way.
Yeah,
45 minutes. I just went to like Dex screener and I just clicked the first ticker there. Yes, and I'm like, okay, I'm buying you. Yeah, I did not even care what it is. And then 45 minutes later, I was already so angry about the entire thing. I'm like, fuck it. I'm rather going to pay like the $30 transaction fee on Ethereum than waste 45 minutes just to buy a ticker, And especially, if I'm actually thinking as a trader, like 45 minutes later, the price is not going to be the same like when I wanted to buy it. Yeah. So it kind of is like, okay, I cannot buy, I cannot sell. 1 hour round trip. It's quite crazy. I don't know, guys, what's your experience, but I was looking so many people talking about trading meme coins on Solana, trading. No, mate, that's untradeable. How do you do it?
Yeah, I mean, you got to get, if you're using Phantom Wallet, like you can't set a priority fee, so it's just hell pending transactions. You got to use something like BonkBot or like something where you can actually adjust those settings and front run people, or else it's absolute hell. Wouldn't recommend it.
What's the best way to then get around the fee? Like BonkBot, will it try to like spam the transaction for you?
Yeah, I mean that's what I've been using. I'm sure there's other stuff around there. I'm not trying to like endorse them or anything, but I mean, it allows you to adjust the priority feed to get in there and basically front run people. Like, I think most people are just using Phantom Wallet and they can't really mess around with those settings. So the people that are able to use any sort of tech that or like wallet tech that allows you to set those settings higher, you're gonna have a significant advantage right now in the Solana trading market.
Actually, there was this really interesting post, and I kind of think it's applicable to pretty much every network. This was from Storm saying that 68% of the base chain state has been taken over by a single protocol of questionable utility, and that's Zen. So here's the picture. Zen is essentially a token that you mint by pushing transactions through, and you try to push as many as possible to try to take up as much of the state as you can. There's a similar like token over on Solana as well too, called IPOR, which has this concept of mining, and you try to essentially like spam the network to see if you can get tokens from it. So with anywhere that there's like cheap fees and a lot of chain state to be able to take over, there's always going to be these tokens or protocols that really encourage spamming. There's nothing that can really be done about it except make more L2s.
Right.
I thought this breakdown was crazy. Just how much of base is being taken up by one single protocol, but it's the same on everywhere else, right? Zen is multi-chain. It's on ETH. I believe it's taking up like 8% of ETH state right now.
Do you remember FOMO 3D on Ethereum?
I do.
A couple of years ago.
Yeah.
There's always going to be something like this popping out. For base, I think that it's maybe a little bit too early for people to judge. Of course, it's like the bullshit is the first one that is going to go there because they see like the biggest opportunity. But I'm really waiting for how base is actually going to develop over the next like 6 months to 1 year.
Yeah. So coming back to Fjord, I know that you guys, let me just pull this up again. So in 1 day, we're actually in 10 minutes here, you can see down on this countdown timer, you guys are actually going to be having the LBP for your own token.
Yeah, absolutely. So this is a huge event for us. We're obviously launching our token through our like cornerstone LBP product. And so that's gonna happen in a day in 10 minutes from now. Got a nice little countdown going. And so that's gonna run from April 16th to April 18th. So Tuesday, April 16th, 3 p.m. UTC is when it'll start. And then that'll go for about 3 days till Thursday, April 18th. It's a big deal for us. Like we've if you look at our stats, we've already done pretty phenomenal stats in the industry, kind of second to none right now. Done over 920 million in funds raised, 25 million in revenue, and out of that 25 million, 7.5 million of that is just since our V2 release in December, like late December 2023. And so we're pretty excited to finally launch our token. Like we've already done these pretty big numbers now, without any token incentives, without anything like that. And it's kind of been a long time coming. I know people have been kind of pushing and waiting for this for quite a while. We'll be launching the FJO token, and LBP will run from for 3 days, and then immediately after the LBP closes, we'll start the TG seed liquidity on Uniswap on ETH mainnet, and let it rip basically.
Good luck, first of all. Honestly, sounds very interesting. And can you also share some stuff about maybe the FJO tokenomics? Like, have you guys already published on like what kind of benefits will token holders have?
Yeah, absolutely. So if you head to our Twitter page, there's if you check the pinned thread, it basically runs through all this, all the information on this, and then I believe at the top of the thread there's a Medium article that covers everything really. So if you want to dive in kind of deeper and check out the tokenomics and everything, it's all there. But I guess to kind of break it down, it's mainly focused around revenue share, and our product's very big on fee generation through revenues, and we want to give that back to the token holders. And I think with that, we're going to continue working on the product, growing it. We're expanding to all these chains. We have new features coming, like zero collateral LBPs, so you can see your LBP liquidity without actually any any real liquidity. You just use a synthetic token, and so that's kind of a new thing that we're rolling out this month as well. And then as far as the product growing, we're going to use 90% of the profits generated from all these projects or all these products to repurchase FJO from the market. So
Nice.
yeah, there'll be a series of repurchasing programs, such as TWAP orders, and tokens will be burned. So that'll create deflating supply over time. And in July, we'll be introducing a staking mechanism. So people will be able to stake their tokens and grow more protocol ownership over time. And we're even potentially looking at airdropping tokens from projects, so from certain, super high quality projects that are launching on our platform. So token holders might also get that sort of benefit as well. And yeah, I mean, it's basically focusing on that. We're not trying to do like DAO governance. Really, we're not really too big on that. We really just want to focus on bringing in revenue and bringing that to the token holders.
How much of what percentage of the revenue is going to be shared with the token holders? I'm interested, and also will the token need to be locked, and for how long? Is it already published in the article as well, or maybe can you share in a few?
Yeah, it's here. So 90% of the profits generated from all products
distributed to holders.
Well, no, they're just gonna essentially buy back FJO.
No, but I mean maybe later on, because at some point, if you say revenue sharing, it's probably going to token holders, right?
No, I mean the tokens are bought and then it's burned.
Buyback and burn is more tax efficient.
To buy them and burn them?
This is a long-standing debate about what do you do with your tokens? Do you buy back and distribute them, or do you buy back and burn?
Can you maybe expand a bit on that? I'm kind of interested to learn about it, in a few words.
If you buy back and burn, you do not create a tax event. It's just the token is appreciating because of the buyback. But if you basically distribute it like dividends, for example, stake this token and you're going to be receiving those dividends are taxable. So for many people, it creates a lot of problem. It really depends on which jurisdiction you're in. For some, it's a problem. For some, it's not. But I know a lot of people that are very strong proponents on the buyback and burn mechanism because of okay, it's just that much more efficient for me. I don't need to do taxes on this. I don't need to. I just have a capital gains appreciation of the token that I have purchased.
I think it works in different scenarios, right? So I think here you guys don't Equinox, you don't have any locking mechanism for the token, do you? It's just free at all times.
Yeah, not at the moment. I think as things go on, we may adjust as we see what's best. But for now, it's just staking. That'll be rolling out sometime in July, and that'll be a way for people to get more tokens just through staking. And then, like I said, we have a buybacks and burning that we'll be doing constantly to deflate the token supply. So kind of just like that, using that as a flywheel.
Yeah, I'm mixed on buybacks and burns. I think that it's good in the beginning to kind of generate some hype around it, but later on, all those tokens that you buy back can be used to essentially distribute to new users, because there was a really great article that we'll share. This is from 4 years ago, actually, from Placeholder BC. I don't know if you've read this one. It's called Stop Burning Tokens, Buy Back and Make Instead. And I think this one's specific more on DeFi stuff. And if you are going to distribute tokens, you have to have some sort of staking mechanism for it, and probably a VE system is better for this. If everything is liquid and there's no staking, then buyback and burn makes a lot of sense. But essentially in here, I think that there's, maybe we can talk about this for a second, where where was it? So when you buy back tokens, all you're doing is essentially like removing tokens from circulation, right? And it helps everyone, but it makes it scarcer, right? There's a small. You're not really like growing the pot by distributing your tokens across more people, and so it's good for creating value, but it's just redistributing current value among a smaller group of people, and so.
Well, not it really depends. It really depends because, for example, in their scenario right now, they are just launching their token right now. So
Exactly,
you
yeah.
do have like quite a lot of inflation that is going to come as they are minting those tokens into existence and distributing them as like incentives for different actions on the platform, etc. So from that perspective, we have issuance on one side because they need to issue those tokens one way or another anyway. And then on the other side, you basically have like a token supply sync, which is your buyback and burn.
Yeah.
In this scenario. So it's different. I have read that article from Chris many years ago. I agree. You know, like just burning a token does not really, yeah, sure, you can just take that token and put it as extra liquidity on Uniswap. But first of all, the narrative of buyback and burn and the deflationary narrative is much stronger in the eyes of retail. So even just for this, yes, it does make a lot of sense. Second, it does carry, those extra benefits that many people, for example, do not need to deal with taxes. They do not need to care about like dividends and how to account for them. So they are quite happy that there is that additional supply removal. And the third one is just again, like it really, like there is no tokenomics that fit every project at every point in time. Yes, you start with something, and then as now your protocol is going to be in another stage of its life cycle, you can make those changes.
Yeah, and I mean, I think you're totally right, and it makes sense for what Fjord is doing. I mean, they've really hit product market fit with their protocol. I mean, you can take a look at just the analytics here. There's been close to $1 billion raised, $954 million raised through Fjord, with $1.5 billion in swap volume, and close to $30 million in fees. So there is real revenue coming through here, and directing it all back at the token is going to be very worthwhile. I wonder if like the yeah. So I mean, the buyback and burn makes sense here, right? Without like more complex ways to use the tokens, then it's definitely the best way to go in the beginning.
Yeah, it has a lot of advantages, to be honest.
Yeah.
So I do agree with you that it's something else to actually see cash flow coming in. You know what I mean? Even if it's I don't know, big or small, but to actually like I personally am very much into the whole let me have a locked position and pay me for it. Personally, I'm learning to appreciate this kind of investment as well. But
Well, actually, here, let
to
me
agree, there are different phases to a project, and you can with crypto you can also do shifts and stuff and do whatever fits to your specific project and community and needs. And it's one of the things we like about the space, I guess.
Well, maybe I can pose this. So I think back when that article was written, and this is maybe where I want to get to, is that we didn't really have the idea of protocol-owned liquidity at the time. Protocols weren't really owning their liquidity stack. And so like I understand that if you're using all this cash to then like buy back the tokens, that essentially is creating protocol and liquidity, because the fees that you get, the ETH and the USDC or stables, go in and help bolster the liquidity pool. But like on a V2 pool, where's the liquidity going to be held, Equinox? Is it like a V2 pool or a V3 pool?
Yeah, I believe it's going to be a V2 pool on Uniswap.
Yeah.
Starting off. I mean, we might change that as time goes on, but I mean, yeah, I mean, we're mainly just focusing on fee generation here, and like our revenues are steadily increasing. Since we moved to V2, our revenue model changed a little bit, and which is bringing in more fees. And yeah, I mean, like we're just really trying to focus on product market fit here. Like we already obviously have established that, but there's things we can do to take to the next level, and a big part of that is dominating all the other chains, right? In going for all the liquidity that's out there with newer chains that are exciting and launching exciting projects. No one's out there on all these chains yet, and we kind of want to be the first ones out there. Like you might have seen a recent thread by us with a good partnership with Frax. They're putting out their L2 Fraxtal.
Mhm.
We're going to be the first, capital raising platform on there. So that's kind of one thing that we're focusing on, is just being first movers and going to where the liquidity is going, like Solana, for instance.
Yeah, you're gonna be on Fraxtal?
Yeah.
Yep, we'll be the first
Wow.
capital raising LBP platform on Fraxtal.
It would be nice. Like, I know this is probably like outside the scope of what you guys are doing, but it would be cool to have the token be used as like a index play for all the tokens that you launch. Like if I don't know if it would work in the current business model, but if I could hold the Fjord token and then essentially get all the get a small portion of all the tokens that are launched through Fjord. Maybe there's some outsized returns that come from that.
Yeah, interesting. There's also a good one in the comments by DYOR Base. Can you show it maybe, Sam? Also some good questions there from Kuj. He's suggesting that holding FJO to participate in like tiers of phases of LBP.
Yeah, I don't think that works. I mean, they talked about that in the thing. I mean, it really takes away from the whole point of Fjord is that it's open and the most fair way to run a liquidity event. Like as soon as you have tiers, then you just turn into like a launch pad. And
yeah, that's totally exactly not what we're going to do. We're never going to token gate sales on Fjord with FJO. It's just against our ethos. Exactly what you're saying. And as far as like kind of getting an index of the LBPs, this is something we are looking into. We're just trying to figure out what's the most efficient way to reward token holders, but we are exploring different partnership opportunities with select tokens and projects that are launching through our LBPs, and I'm sure we will find some great synergies here where we're airdropping FJO token holders from the tokens that are being launched on LBPs. So as far as like a index token, that's like getting an index, that's kind of as close as we're going to get. We don't think it's really wise to do it with every project launching on Fjord, but that's definitely something that we are exploring, and probably have more details around that as time goes on.
The index could be an interesting direction, to be honest. Also, wanted to share these questions from Kuj, if you can show him on screen, Sam. He's asking about an idea of a seed price, a token utility we kind of talked about, but also maybe the starting price of the LBP. And maybe, I don't know, for the viewers who maybe are not that familiar with, we kind of have, thankfully, a lot of people on. So for those who are not that familiar with an LBP, maybe we can share a bit about the advantages of doing an LBP, like why it's a fairer way.
Yeah, for sure. So yeah, basically our cornerstone product on Fjord is the LBP, which stands for Liquidity Bootstrapping Pool. And what this is it's just a very fair and effective way for teams to launch their tokens, for teams to raise capital for their projects. So we see it as one of the most efficient DeFi native ways that a team can establish their token and generate liquidity for their community, basically, and all the while making sure there's a fair supply distribution. And like I mentioned earlier, when we've done this since the beginning, we're leveraging balancers weighted math. So using different starting weights for the token, different ending weights, and essentially creating a decay function that's applied to the price. This helps starts the price off very high and then pushes it down. And that way it's anti-sniper, anti-bot, anti-whale. So people that are bots, you know, that are trying to like hop in at the very beginning once the token launches just get completely wrecked. They can't snag up a huge percentage of the supply and then dump on everyone's head. And, you know, that's something you'll see, you know, if you just see a token launch on like, I don't know, on Uniswap or something, without any of these sorts of safeguards, you know, people who are there first get a disproportionately high amount of supply, and then they can make it a very unenjoyable experience for everyone else while they, you know, kind of exploit that and make profits while everyone else kind of gets wrecked. Using LBP prevents that. And then typically on average, like, you know, it's all decentralized, permissionless. You know, people can set various different factors and set up LBPs by themselves. But typically people's teams set it for 3 days on average. And this is a good middle ground for traders to get in. And, you know, people are all in different time zones. People are busy doing different things. People can't always get in on, you know, like 1 day or in like a small hour, you know, several hour time frame. So this gives, you know, like 72 hours typically for people to get in. And it's also helps teams, you know, find price discovery as well. Like it helps price their product or their project token by like using this this infrastructure. It helps people kind of price in their project and their token. So there's a lot of different things that goes into it, but you know, from a trading perspective, it's fair, and it helps people get in and get a fair chance to get in on tokens.
I agree. I really think. Go ahead, Sam. Go ahead.
What's the biggest winner that's happened on Fjord?
I don't have these stats with me right now. I wish Jan was here right now.
It's cool. It's cool.
Yeah.
Can you? I actually think that you know, I definitely agree that an LBP is, at least from what I know and participated, not in many. I think maybe only in one, but I do think that actually it's the fairest concept of a launch that I know of. And can you maybe just share a bit about both? Was there any kind of like a seed round before that you guys can share about? And of course,
well, they just had a round that happened back in mid-March, right? So you guys raised $4.3 million from Mechanism Capital, from Z Prime, and a few others to essentially take Fjord to where it is now.
Yeah, that's right. I mean, exactly that. Yeah, I mean, you can see we got some pretty good backers, and yeah, exactly that.
Well, that's cool. We'll wrap it up there because we're at the top of the hour. We've gone over a little bit, actually. Thank you for coming on and talking about your upcoming raise, or the LBP that's happening. That starts in exactly 1 day. So at 11 o'clock tomorrow Eastern, that's what, like 4 o'clock European time, and 9 o'clock Mountain time, 8 o'clock Pacific time. What time is it there for you, Dimitar, in Asia?
11 p.m.
So late at night, that LPP starts. It starts at a high price and comes down to a lower price, and so there's more than enough time to take advantage of it over the next few days while it's running. You can find the links in the show notes, and thank you for coming on, Equinox.
Yeah. Thanks so much for having us, giving us time to talk about it. We're super excited for this for this LBP token launch. So yeah, definitely, I think it's something that people should keep their eyes on. This isn't something to just watch it fly by. Like, yeah, pay attention to this. I think there's going to be a lot of attention on this. There already has been, and yeah, appreciate you giving us the time to come on and talk about our product, talk about our team, talk about what we're up to.
Yeah, and Dimitar, thank you for coming on as well too. Really appreciate you staying up late and joining the stream today.
Thank you.
Yeah, it was really fun.
Sir.
It was really fun, Dimitar, to meet you for the first time. You as well, Equinox. Good luck with the launch, of course, and good luck to IPOR with the new products. And thanks for another great day of hosting to start off a new week, Sam.
Yeah, definitely. Well, we've got more guests coming up this week. So make sure to tune into Leviathan News every single day, 10 a.m.
Yeah, and come to the channels. By the way, guys, we should now also give us your addresses. We want to reward guests and stuff like that. Let's remind about that, Sam. Share, give the audience some.
Oh yeah, please come to the Leviathan News bot. If you want to earn some squid points, you can submit news through our bot. And additionally, if you don't want to help make the news, you can also come to pods.media.
Oh yeah,
and mint this episode as an NFT. So we'll have the links for that in the show notes, and we'll share it on our feed as well too at Leviathan_news at Twitter and Telegram. And we'll be back tomorrow.